Perfect. All right. So Cindy, go ahead and introduce yourself.
Hello, everyone. I am Cindy Seddon here at Keller Williams. I have been a real estate agent. This is going on my 6th year, and I just love new home buyers. So who's up next? All right.
Hello, Stephen with Keller Williams as well. This is my 2nd year in real estate. Still kind of getting the hang of it, but we're all good right now.
I'm RJ Balver with Platinum Home Mortgage. I've been doing loans now about 5 years. Just love helping everybody from a first-time home buyer to a home investor. And I like making plans for them. Sometimes we're at where we want to be and sometimes we're not. It's all about figuring out the best route and foot forward. So we're here to present a seminar to you today. It's going to be somewhat interesting. We don't have too many here in the room, but we're glad you're joining us here on Zoom, and we're going to be sharing this recording. So for starting off first, we're going to have, I'm up, so we're going to talk about where to start, right? So where to start? Here. I'm really glad that you're here. It's a good first step forward. There's a lot of different things to think about when you're thinking about buying a home, right? But first, it's all about really designing a path and a plan to that home ownership. Starting with a lender and realtor partner team, we're going to figure out exactly what you're qualified for and what kind of loan options are available to you. Maybe you're a first-time home buyer and you want down payment assistance. It just limits the amount of money that it takes to get into that home. Maybe you're a home investor and you're looking to get that next rental property, right? So that's going to require different loan programs as well. That's where I specialize in. I'm going to look at all of the options available to you, present them to you, and then you can decide what's best for you and your family as you move forward. So if you're first starting out and you're trying to figure out how to buy a home, there's credit to think about. Okay, what is credit? How do you build credit, right? Maybe, what's that?
It's not showing us.
Oh. There we go. Where to start? All right. So a credit profile is basically a complete history of the credit accounts someone has or it's held in the past. If you have no credit profile, where do you start? You're starting by building credit with a secured credit card. What is a secured card? It's essentially you borrowing against your own money at an interest rate provided by a bank. So you can maybe have $200, $300, $500. You go to a bank. Some of them options are like Capital One, Bank of America, Chase. And they'll approve you generally based on some other history they've seen, maybe rental history, whatever it might be, utilities. And you can obtain a card that you can use that $500 or whatever it is down on that. And then you can borrow against that $500. So you're borrowing against your own money, but it's helpful because then that bank is going to report that history on that money to the credit bureaus. That's how you start building that credit. Once you start building that credit, then you can get those other accounts, right? You might be lucky and you can apply straight for a regular credit card. If you can't, a secured card is a great place to start. So paying debts on time, avoiding unnecessary inquiries. I know it's maybe tempting. You're at Old Navy and they're saying, hey, you can get 20% off if you apply right now. Yeah, go ahead and avoid that. Only apply for credit that's actually going to help you. Try to avoid too many inquiries, too many consumer cards just to get the 20% off. Think about the impact it has on your credit. Is that 20% off worth it? Maybe if you're buying a lot, but if you're buying just a few things, it might not be worth it in just running your credit all the time. What I was talking with Stephen and Cindy yesterday about is when we talk about credit, we generally think of it from a consumer point of view. And what that means is, what does this credit score mean to me? Does it determine my value? I'm here to say, no, it doesn't. There are excellent people with horrible credit, and that's okay. Life happens, events happen. But I wanted to challenge you to think about credit in the perspective that you're lending people money. The bureaus only report a score that determines essentially their point of view on how much money you as a consumer can make a bank. An ideal person to a bank is someone who maintains a rolling balance on a card, who pays that card payment on time every time, and who is generally not maxing out those balances. Why does that make banks money? Well, because the payment's always made. They're always making their money because interest is always getting charged. That's why the rolling balance is important. Now, I'm not here to say that's the best way to think about it as a personal consumer view, but as a bank, that's what they're looking at. So in essence, we're thinking about maintaining your accounts, paying on time, having a decent eligible like age of accounts, average age of accounts, and that's going to help you build that credit profile. Also, keeping accounts open even when they're paid off. Maybe there's a card that you like to use or more than others, and those other ones are just kind of sitting in a drawer. Try to use them periodically, maybe once a quarter, maybe once every other quarter, at least once a year if minimum. That's going to keep the creditor from just closing it out because they're like, why are we giving this person credit? They're never using it. But instead of that, it's going to show that, okay, they do use it. Maybe it's a small balance, even if it's $50. Say if you got a jewelry card, you know, you go get your jewelry cleaned, put it on the card, let that little balance roll over, pay the interest on it. They're just happy because you have a balance, right? Not telling you to go out and spend a lot of money on it, but it's important to keep these open. A lot of times we pay off our debt and we're told to cut those cards up, throw them away, cancel the accounts. That actually hurts you in the long run because it takes your average age of accounts, it lowers it. It takes your available total balance of credit utilization, lowers it. So it's going to hurt you. So let's see next. Thank you, Dennis, my lovely assistant, Dennis. All right. So what is a credit profile? A credit profile is a complete history of the credit accounts someone has open or has held in the past. So a healthy credit profile, like I said, has several accounts open that are revolving, right? That they have maybe a small balance that are rolling over, that you're paying interest. And I know I hate paying interest too, but it's going to help build the credit. If you're established already, don't worry about it. You don't got to pay it. If you're trying to establish that credit first, you're going to have to pay it. So a healthy credit profile, think about installment loans, mortgage loans, et cetera, that are paid on time with the lowest balances possible. An unhealthy credit profile has limited accounts open, 1 or 2 accounts, late payments on those limited accounts, and maxed out balances or prolonged time with 0 balances. From a credit bureau's perspective, when we have maybe 3 accounts and all of those accounts have late payments in the last year or 2, that's going to weigh heavier than someone who has 10 accounts open that maybe has 1 late payment in the last 2 years. It's going to weigh totally differently because it shows how that person can handle credit versus the other. Like I said, this is not a judgment on you as a person. It does not determine your value. I'm just trying to figure out how to get you guys with the highest scores possible. So up next, thank you, Dennis. What is debt to income ratio? So the debt to income ratio is the amount of minimum monthly debt payments compared to your gross monthly income that's represented as a percentage, right? In example, someone with a $2,500 a month in minimum monthly debt and $5,000 in gross monthly income would have a debt to income of 50%. So that's something to think about. And it's something we as lenders look at. And depending on your debt to income, it's going to kind of narrow what your loan options are. The smaller the debt to income, the more options are available. The higher the debt to income, the narrower options that you are eligible to you, right? So your next step, let my team check your credit. We're here to help you guys out, right? We're not credit repair specialists, but we do excel at looking at credit, establishing income and what those credit scores are, what your debt to income is, and giving you a plan and options, right? But once you figure out exactly what you need credit-wise, that's when we start moving towards either putting a plan together for you. Maybe it's paying down balances. Maybe it's paying off balances. Maybe it's opening up new accounts. And that's generally going to give you your best options for your next foot forward. So our next step is check in with me and my team. Our info is at the beginning of the slideshow. Feel free to give me a phone call anytime. I'm happy to chat those options out with you. Most loan programs need a FICO score of 620, but there are options down to 580. They're just a little bit more narrow, right? And then pre-approval. So what's in a pre-approval? I know it sounds scary. Oh my gosh, what's going on? No fear. We're just going to look at a few documents, right? We're going to look at the last 30 days of your pay stubs. We're going to look at the last couple years of W-2s, or if you're self-employed, the last couple years of your tax returns. Then we're going to look at a credit report. And then lastly, bank statements, right? What kind of money are we working with? Some people who are timid to share bank statements with me, I understand. We are licensed professionals. I have a state license, multiple state licenses, and I'm federally registered with, with the NMLS. And so I am qualified professional, the guy who can look at these documents. Some people are worried, well, what are you going to look at in those bank statements? I'm like, I don't care that you go to Chick-fil-A or Sonic every night. I don't care about that. I just have to establish the money that we're using to buy this home has been in the account. You didn't take a loan out for it, or that you didn't get it from, your cousin Bob down the street with cash and it's sitting there and it just got put in and there's no way we can trace the money. That's all it's about. Next, Dennis, thanks. The mortgage application, right? So that's all part of this pre-approval. Once we get you pre-approved, we have that mortgage application dialed in. All we need is the house. What does this benefit you? It helps you narrow down exactly what you're qualified for, so you're not looking way too low, or maybe you're not looking way over what you're qualified for, and setting up unhealthy expectations. The worst thing that we can do as a team is put together some kind of pre-approval package that's wrong, or take you out, show you houses that are $1 million and you're only qualified for 700,000, whatever it might be, right? The worst thing is you fall in love with that house and you don't get it. We're not doing our jobs as professionals then. We have your back 100% of the way. So with that, it's really helpful to know exactly what you're qualified for. And then once you're pre-approved and qualified, then you get to go house hunting. Take it away, Cindy.
And that's where your realtor comes in. So once that pre-qualification, you have that number. Let's say, just like RJ said, it's 700,000. I know I'll do my job. I will go through the MLS, which is the multi-listing service. And you'll see that, like, when you're looking as a buyer, you're looking at Zillow, you're looking at Redfin, you're looking at all kinds of different options. And I will pull homes in that price range for you. We'll establish which homes we want to go see, and then we'll go out and we'll go look at homes. One of the things with working with a realtor that you have to keep in mind, very, very important. Yeah, there's so many ways right now to get to see what's out there, what's available. But are they truly available? Sometimes there could be listings out there that are already in an active escrow, and maybe it just hasn't been changed in the system. That's where I come into play to help you out with that and take you out there to look at those homes that are truly available for you to look at. Some of our homework on this also will include looking at, what do you want in a house? Are you looking for a 3-bedroom? Are you looking for a 4-bedroom home? Are you looking for single story, 2-story? What kind of yard do you want? What type of floor plan are you looking for? How about the neighborhood? Those are things that we will work with together, and we'll find you that dream home you're looking for. Stephen, do you have anything to add here?
No, you pretty much covered everything on the slide. Obviously, we're licensed professionals. We help you find the home that you want. Yeah, you can use Zillow, Trulia, any other home searches that you can, but again, that information may be outdated. So why not come to the experts who know how to navigate those systems and get you into that right home?
Exactly. Okay, what's next up here?
Making an offer.
Ooh, our favorite part too. Okay, that's where we come into play again. So working with your real estate agent, that's us. We're going to help you make that offer. We're going to do our homework on the area, research the comps in the area, which is the comparable sales in the area. What are prices of the homes going for in that area? Knowing the market, understanding where the market is right now. Is it, can we come and make an offer just a little under what it's asked for, or do we have to go over the asking price? That's our job, is to give you that information, what you need in order to write that offer that's going to help secure that home.
And that's also where I can come in as well. So making this offer, right? I have my own mic, thank you. Cindy's like, here you go. So where I can also come into is we're a team. So when we're making these offers together, it's important that there's a complete pre-approval package like we talked about, and it sets you apart, right? I don't just give a letter. I put together a customized, and Cindy's seen it, Steven's seen it, customized pre-approval package with all of your realtor's information, a checklist with everything that I've evaluated, and then also we're going to give them some credit scores to show that you're strong. We're going to give a snapshot of a bank statement so that we can show the proof of funds that you have the money to do this. Or if it's down payment assistance, we show that as well. And then when we're looking at this sensitive information, we're also redacting account numbers, routing numbers. So it is safe. We're going to share it with people. We're going to take your address out of it. We're just going to show your name. And then here's the bank statement with the money inside of it. We're also going to show them that pre-approval letter that most lenders obviously generate, but it's not just that. We're also going to show automated underwriting approval. What is that? It means that we've run your info, your whole loan package through the system and at least got a preliminary thumbs up. This is the extra step that not every lender goes through that makes it really competitive. I'm also open and have won many hearts and minds of other realtors, listing agents, by after we submit the offer, I give them a follow-up phone call. And I chat, hey, here's our package, here's what's strong, here's why we're great. They usually ask me, how quick can you close? I'm able to say, hey, we're able to close quickly. I'm able to show them all my processes, and just showing them that I'm on the ball is usually enough to win it, because usually the number one thing a listing agent cares about is a seller getting out of their home in the right amount of time, that escrow closes smoothly, that there aren't hiccups or as little as possible, because things happen. And once we do that, it makes you more competitive.
And once we kind of make that offer, the listing agent and the seller do have the opportunity to counter offer. This is just basically saying, hey, we know we liked your offer. Could your buyer come up a little bit more, or can these contingencies be removed? Things like that. Obviously, we don't recommend that. But we, as buyer's agents, we may ask, what's your highest and best offer? The most you're willing to pay for that home. That way we can have a ceiling. And let's say the listing agent decides to try to push that ceiling, we can fight back and, you know, kind of go both ways on the fact of counteroffers, offers, and other things like that. You can always have more than one counteroffer to counteroffer, and it just goes on and on at that point until everyone's happy. Yeah, I think that's it. Next slide, please.
All right, so up next, once that offer is accepted, hooray, you did it. We did it. It's awesome. So the offer's been accepted now. And yeah, I guess it's camera's following Cindy. So
I know.
the offer's been accepted. What we end up giving you guys once your offer's accepted, we have that last piece of the mortgage application, which is the address. We're going to run that through the system again, make sure we're going to estimate those taxes accurately for you, those property taxes. And we're going to give you a loan estimate. What is on this loan estimate? It's all of the preliminary estimated costs of getting into this home. What is your down payment? What is your estimated or locked in interest rate? Maybe we blocked it. Maybe we're waiting out the market a little bit and seeing what we can do. Maybe negotiate a seller credit and get you something better. Or there's still things that can happen. Inspection period, maybe Cindy and Steven can go ahead and negotiate a little bit of credit on repairs or whatever it is. We use that money, buy down your interest rate. I know rates are higher right now, and that's a concern for a lot of folks. So in that loan estimate, it's going to show you the breakdown of your monthly payment as well. And in that monthly payment, you're going to have principal and interest, which means your loan payment plus the interest payment. And then you're all going to have your property taxes, right? And people go, aren't property taxes due annually? Yes, they are, twice a year, right? Usually in April and December. We have a part of your payment is those property taxes, so that the money's already there when those taxes are due, right? You can pay them separately in some loan types, so think about that as well. You're going to look at your homeowner's insurance, also paid monthly as a part of your mortgage payment. And that's so that when those are due once a year, those policies are due once a year, there's enough money in the account to pay those and renew the policy. So, and then the fourth thing really would be mortgage insurance. What is mortgage insurance? It's a monthly premium you pay if you're putting down less than 20%, generally, unless it's like a VA loan or other type. But if you're putting down less than 20%, there is some mortgage insurance there. It's a one-time kind of like once a month deal that you're paying to insure you and the lender. In the case you default, you stop paying on it, the lender can make some of their money back, and they're more likely to get you the loan because they have this security versus back in the day, it had to be 10, 20% down. Now it can be 3% down, 3.5% down, 0% down. There's all these programs. Part of that does come, there is some mortgage insurance, so the lender is secured. We don't necessarily want 2008 to happen again, so we need the lenders to have enough money. We don't have a lot of people defaulting and then all that going away. So that's all in the loan estimate, as well as how much money, closing costs, right? So closing costs, what are they? Usually people just go, hey, I got my down payment, I'm good. Well, the closing costs are those kind of add-on costs. Think about it, if you've ever purchased a vehicle, there's taxes, license, registration, right? So when you have these taxes, license, registration, essentially we're looking at those extra added on costs because there are multiple parties in the real estate transaction. Okay, we have your closing costs for escrow. Escrow is a third party, kind of like a referee in the transaction, and they're going to essentially cover all the paperwork that's handed between the lender, title, real estate agents, yourself, that kind of thing. Title is going to be a company that researches the historic property details, meaning like what liens were recorded. They're going to see, was there, Aunt Betty recorded a lien on the property back then, that's got to get paid off. Making sure when you take ownership, you're recorded as the actual owner and no one's coming after you down the road. Then also there's going to be your lender fees. So yes, as a lender, we do charge to set up your loan. Part of that might be paying to get your interest rate down. Part of that might be just paying a regular appraisal fee to get the house appraised, that kind of thing. So those are all closing costs. But I think we're running out of time. Is that what? Okay, we got 10 minutes. So we're gonna blow through this. We also have, next slide, please. We have earnest money deposit. So your earnest money deposit is your skin in the game. It's negotiated by Cindy and Steven. That seller might want a specific amount to show that you have skin in the game, and it is eligible to loss if you were to back out of the transaction at some certain point when all of your protections have been removed. The seller might have some, I guess their skin in the game would be their house, and your skin in the game is this amount of money. Could be $3,000, $10,000. It's all negotiated. If the seller is not, you're not pulling out of that transaction, that money does not go to the seller. It's going to go towards your down payment closing cost total. So that's all right. Home inspection.
Mike's
Okay, cool.
home inspection. So when we waiting for the camera to get in focus of me, Cindy, you're my light.
No.
Home inspection is kind of just a health checkup for the home that you're buying. We get an inspector in, they do termite. If it has a raised foundation, they go underneath, they actually get their hands dirty and make sure that that foundation is still good to go. And this is also probably one of the best areas to get that negotiating power back. If, let's say, anything comes up on the home inspection, it's going to cost some money. Why burden that on you when you can try to get the seller to buy it themselves or do it themselves before escrow closes, or even after escrow closes? Just depends on the situation. Like I said, the inspector will usually the reports are within 24 to 48 hours. They'll give you pretty much a very detailed explanation of everything that is wrong. That way we also have that power to go back towards the seller and make sure they know what we're counter offering or what we're asking for. That way they're like, oh, a roof repair, that's only going to cost $500 because we just need to replace the shingle. Not necessarily, they could be damaged under those shingles as well.
And generally for budget, how much does that cost, Steven?
Roof repair?
No, the home inspection.
Oh, a lot of places, yeah, 450, 550. A lot of places offer specials too. If you work with a reputable agent who has connections, under 300. Yeah.
Just put aside the house too. Yeah.
Yeah.
Size of house, is there a pool? Is
Yeah.
there not a pool? Things like that. So, all right. So, yeah, that pretty much wraps up home inspection.
Yeah, so with that home inspection, it is important to see exactly what's going on with that house, and that's where insurance comes. So it's time to find insurance. You can choose whoever you'd like, however much coverage you like. But think about this, the higher the coverage, the higher the premium usually. And that premium is, like I said, paid monthly in your mortgage payment, and that can elevate that payment depending on the coverage you get. If you want supplemental coverage, flood, earthquake, whatever, that can elevate that monthly outgoing expense as well. You can use whoever you like. If you like Geico, if you like State Farm or Allstate, whoever you like. But we also have recommendations as well. So you feel free to pick our brains, but that's insurance. And the appraisal. So what is the appraisal, right? So that appraisal is, like I said, a professional will come out to the home and they're going to assess the home or appraise the home based on other sales like that home in nearby areas. What have those homes recently sold for? determine the valuation of the home. Ideally, the home appraises for more than you're buying it for, but not always. Sometimes if that home price was a little inflated, sometimes it comes under. What happens? We have to negotiate who's going to make up that gap, whether it's you as the buyer or the seller, just lowering the sales price to the appraised amount. And then next is required repairs. So the appraiser is going to call out certain repairs, and with those repairs, they will have to be achieved or accomplished. They will have to be fixed, and that's because in order to meet that value, those certain repairs had to have been taken care of. So the underwriter, right? The underwriter is going to require that whatever the appraiser called out, those have to get fixed and addressed. So that's important to figure out. The home inspector, not everything has to get fixed or addressed. That's for you. The appraisal, that the lender receives the appraisal, we don't receive the home inspection. So that's something to think about. And then we submit your loan to underwriting. Right now, our turnaround times are a day. It's really quick, right? So we submit your loan to underwriting. Underwriter determines your final thumbs up or not. Sometimes they give like a temporary thumbs up. They just might need an extra bank statement. They might need a little letter explaining how come last year was a lot lower than the year before or something like that. And income wise, there's a lot of different things to think about. So we call that conditional approval versus full approval. But once we address those things, right now, like I've been doing it 5 years, I got 100% approval rate. Like I've never had an escrow fallout because I calculated something wrong or did anything wrong. So you're in safe hands, right? So once we get those underwriting approval messages, then we're good to go. We can basically move forward to scheduling your closing, right? And then when we schedule your closing, there are going to be some documents you sign with a notary. Those are called the loan docs. So a fat stack of papers. We always say, hey, you're signing your life away. I bought a few homes in my time, so I've signed my life away a few times. But all joking aside, you'll sign those documents. It helps us get everything we need to get your loan recorded so that you get recorded as owner. And as a part of that, kind of moves really quickly at the end, there is a final walkthrough.
Which we do a final walkthrough up to about 5 days before that final closing. You want to make sure that the home is in the exact condition that you originally saw the home in or when you did your home inspection. So again, that's super important, but that'll be scheduled with your real estate agent as well. Let's see, and then we come to what? Final numbers?
Yep,
payment,
final numbers,
all
just
that
making
stuff.
sure all your payment, this is now finalized. Everything's good. All our numbers came in ideally where we needed them to be, maybe even lower, which is great. You give in, the payment, we then record your home. And then that's next. We have our day of closing. Sorry, I'm rushing. We do have a couple minutes, so I want to make sure we get through it. So our day of closing, we have a title record you as owner of the home, which is super important. You then now have legal documents that you own that home. And then usually your first mortgage payments due about 30 days from the last day in the month you close. So if you close here in the month of February, anytime between now and the end of February, your first payment's going to be April 1st, which is great. So you do have a little bit of time to get out of, maybe you're renting, you got to get out of that home, 30-day notice, move, do all that kind of stuff. So.
Okay, and then I don't even have to turn around because now that we're close, it's our favorite day.
Yeah.
Keys.
Key day.
Okay, so that's when we'll meet you at the house. We'll hand you the keys and you now have home ownership.
Yeah, and I mean, that pretty much wraps everything
It
up.
does?
For our viewers in Zoom, do you have any questions? And if this does cut off,
You'll get the recording.
yeah, you'll get the recording.
Reach out
and reach out to us and
Yep.
we'll be able to answer those questions.
All right,
Absolutely.
thank you.
Thanks everyone so much.